Hey everybody, Scott Walters, buckle up, strap in. We got a hard-hitting pull, no punches, no sugarcoating it, no rainbows, no sunshine. I'm just going to give it to you and give it to you straight. We got a good one to unpackage today. Is America headed for another Great Depression? Well, you get to decide. It's the million-dollar question, I guess, unless you ask another real estate professional out there. I remember in the stimulus era, when it was just bonkers, right? Completely bonkers. Who says bonkers? There's another channel out there that says bonkers all the time.
Absolutely bonkers. Now,
the reality is this. I remember asking real estate professionals all the time, so what do you think? Any crash risk here?
No, this time is different. In 2008, there was ninja loans and subprime mortgages. The loans are stronger.
Okay, cool. Like you could not... Sales trainings. As I've been a salesman my whole life, and that's what I always tell you guys. I'm trained in the psychology of sales. In the psychology of people, this will always come down to people and their confidence in the markets. And the confidence in these markets have been clearly shaken. But most of these sales trainings, and everybody's sales trained, they're not trained to put you on the sidelines and help you buy later if that's what you want to do. You should always be let somebody do what they want to do. Don't convince them. So many sales trainings that are just designed to get you objective handling, get you to buy now, no matter what. So most agents now are going to concede to, well, I think we're going to have a little bit of a correction. You seen that one? Even these top level economists or real estate professionals that make their way onto mainstream media. A quick break from the show to bring you today's video sponsor, GoldMining Inc. Everything is expensive. Gold is perfect for this environment, but it's nearly at an all-time high already. So I want to present a company called GoldMining Inc., trading on the New York Stock Exchange under the ticker GLDG. The reason is that this company trades at multi-year lows, extremely cheap. If you go to wealthresearchgroup.com/cheapgold, there's an entire presentation explaining how this company is effectively 80 or 90% more discounted than anything out there. If you're bullish on gold, I urge you to stop everything you're doing and download this carefully drafted report. There'll be links and information in the description of the video and in the pinned comments. A big thank you to GoldMining Inc. Always be careful when investing. There's going to be risk. Now let's get back to today's show. Jerome Powell himself. I think we might need a little bit of a reset. Well, they've been wrong in everything they've predicted. We've got so many headwinds. But for me, I always say, it doesn't take a rocket scientist to figure this stuff out. When you overheat not only the world's biggest economy in the world, the United States, the world's biggest asset class, the U.S. real estate market, when you overheat those, crash risk will always be present. And that's why I found it so shocking that nobody could wrap their head around that, even as an industry professional. I know for you guys, you appreciate honesty much more than just some blatant sales objective trained salesperson trying to get you to buy in a very dangerous environment. So crash risk all over this thing. But it comes down to now the three levels. It's so basic in nature. We've had it throughout history. Three levels of an economic downturn. A correction, which we're in now. Clearly a correction, right? There's no more run-ups. We're flatlining at best. A lot of areas, if not most, are starting to record declines. We've got a lot of headwinds. There's a lot of disaster now. We've got a lot of metrics. The U.S. savings rate at an all-time low. That's not good. U.S. debt at an all-time high. Well, that's not good. We know we have the two-headed monster out of its cage, and the leadership doesn't know how to get it back in. Runaway inflation and a risen interest rate environment. That's a two-headed monster. So if we can stop it at the correction phase, we enter into the recessionary level of a downturn, which a lot of us remember from the Great Recession of 2008 as a bill-paying adult. If you were not a bill-paying adult in the Great Recession, I don't really believe you're qualified. Yeah, you can pull on data. Everybody wants to chase the data. The data will not tell you everything. This will come down to the psychology of people. Psychology of sales. How people are comfortable they are in this environment. People aren't comfortable anymore. It's the $1 million. I see in the comments. I see this message. I see the emails. You guys, I'm freaking out right now. I bought in this mess. What do I do? You try to weather a storm and you get prepared. Be prepared. Failing to plan is planning to fail. You better get a plan. Potentially a walk-away plan from the thing. That's just the realities. I mean, and I would never suggest anybody do anything that I haven't done myself. I did a short sale in the last crash. I had to dump one of the properties. I had others, so I was like, whatever. This one's got to go. It's this business. Now, it was no fun. Certainly don't want to go through it again. That's why I'm here with you today. But if we can't stop it there, friends, that's when we hit the third and final stage, a deep cycle recession that's categorized as a depression. Like we saw in 1929. You didn't live through that. I didn't live through that. None of us are qualified really to speak on that one other than this one last data point. Historical data, and there's a lot more we could pull from, but we're going to simplify this as much as possible. Historical data has shown depressionary levels, the most severe, of downturns have cycled approximately every 100 years throughout recordable history. 1929 was the last depressionary level of a downturn? What? We're in the depression cycle. Oh my gosh. By 2029, we could be in the throes of a depression if history has told us anything. But all the cheerleaders are going to tell you why we won't be. Why this time will be different. Well, we've seen what the only thing that's different now, because they were telling you this when I was warning in stimulus, where you look like you're off your rocker to warn people. It was all the gravy train, a casino climate, drunken sailor spending out there. Now it's all but gone. Stimulus is gone. Runaway debt, runaway savings. It's bad. It's just bad. I mean, it's now to see who's insulated, who took on too much debt. Too much pressure to buy a house, my friends. Too much pressure to buy a house. A lot of people will lose houses. Now, of course, leadership will step in and try to implement some more bailouts to see if we can save this thing. But that happened in 2008 as well. We had bailouts, the loan modification program. It didn't work. We crashed anyway. Just what happens. And you can't pull from history to try to figure out the catalyst, because it's always been something different. It's always been something different. But for me personally, I just found myself as an active realtor in the biggest bubble ever witnessed in human history. And I reflected back in 2008 where I suffered a little blowback. And I'm like, I don't remember bidding wars in 2008. I don't remember waiving contingencies in 2008 to get my offer accepted. I don't remember waiving inspections, not knowing the health or the fitness of the home, rolling the dice to get my offer accepted. People were buying houses that they normally wouldn't look twice at. Why? FOMO, fear of missing out. They were compromised. And now we've seen it with all the migrational home buying that took place because of the crisis. And now that the crisis is over, these people are getting pulled back to work. They're stuck. So now it becomes inventory driven. We need the inventory. And what we just talked about could clearly supply inventory when people have to move closer to their job or lose their job. That's going to create inventory. But everybody wants to chase lagging data. Well, there's no inventory. The basic 101 supply and demand shows us that no crash risk here because we don't have inventory. Well, what happens when it comes? It's clearly coming. Is there talks of a robust economy being able to sustain itself? Well, maybe by the people that need to say that in order to remain in their elected positions. But the reality is we see everything else pointing to exactly the opposite. And final thoughts I come to as a friend, as a content creator, as a real estate guy that wants to see not only win in real estate, win in life. Understand the waters you're swimming in now. They're shark infested. The depressionary level of a downturn is now in the swimming pool with us. We have to entertain that. It's quite possible it could happen again. We're in fact in the 100-year cycle mathematically alone. And for that reason, I'm going to continue to raise awareness, ring the bell, sound the alarm, and blow the lid off it whenever necessary. Because it's not only what we need, it's in fact what we deserve. If you appreciate the content, I want to humbly ask you to give the video a like, subscribe to the channel, leave a comment below. I'd love to hear from you. Social media links in the description of this video if you'd like to contact me there. Along with links to channels I've appeared on I think you might enjoy. If you need help buying or selling real estate here in America, I have the biggest network of top-rated agents in the nation ready to assist you. It'd be our honor and our privilege to do so. Email in the description for you as well. Or simply reach out to ScottWaltersRealestate@gmail.com. We'll find you there. Also, if you're watching from your television set today and you enjoyed this video, gonna love the next video. And there's an easy subscribe icon for your convenience. As always, thank you for your time. Please go make it count today. I'll see you on the next video.